What's up, social media world? It's me, BP and Peters, coming at you with a new video. Guys, what's the biggest expense in your life? Okay, a lot of people might say housing, a lot of people might say food, a lot of people might say all sorts of things, but I personally believe one of your biggest expenses in life is always going to be taxes. Yes, that's right. If you live in the United States, you're going to have a huge tax bill for the rest of your life. Anywhere from, depending on your income tax bracket, anywhere from 20 to 40% for the rest of your life. And so this video today is designed to show you how you can use real estate to essentially pay zero tax and put more money in your pocket every single year. But before I get started, hit that subscribe button, hit the like button. I know it sounds ridiculous, but it gets this video in front of more people who want to save taxes just like you. So with that being said, let's jump into it. So as I said, income tax is your biggest expense in your life, and I want to teach you guys how to bring that tax down. So first things first, I got to qualify this. I am not a tax accountant. Everybody's tax situation is different, but I found out this tax strategy to save so much money on taxes. And so I want to share that with you. But again, I'm not a tax accountant. Please hire yourself a good tax accountant. If you are using TurboTax or you're doing taxes yourself, chances are you're overpaying. So you need to find a good tax accountant. If you want, my contact information is underneath. If you want the name of a good tax guy, I absolutely love my tax guy. Shoot me an email. I can definitely send it to you. These are some things that I learned from my tax guy that are somewhat universal, but everybody's tax situation is different. So make sure you check with your tax guy, and there's also state taxes that come into play. So I'm just going to give a very, very basic example so you guys can kind of see the power of real estate investing and how it can really bring down your taxes and add to cash flow every single year. All right, so I wanted to come up with an example that everybody could identify with. So most people, a lot of people set a goal of, I want to make six figures. And if you're watching my channel, I hope you're making six figures and you're investing in real estate. But if not, this is something you can achieve pretty easily. You can use these tax benefits even if you're not making six figures. So let's just give a basic example. So if you're making $100,000, and let's consider you're self-employed, according to the IRS, as of right now, if you're making over $100,000 right here, this is assuming you're single, for incomes over $89,000, you're in the 24% tax bracket. Let's assume you have no deductions whatsoever. That $100,000, you're in a tax bracket of 24%. Your tax owed is $24,000. Now, I'm very much simplifying these numbers. We do have a progressive tax system, so it wouldn't be a full $24,000, but it'd be fairly close. Again, I'm trying to use simple numbers to help you guys grasp this concept. At a 24% tax bracket, you would owe $24,000. Now, let's see if you bought real estate and used what is called the cost segregation study, how it could bring down your taxes. I've used this unit in the past in a previous video, how it might have looked like the worst investment ever, but this is a quadplex located in South St. Paul. This quadplex cost me $385,000. My payment on it is $19,069. And rents, I actually just re-signed these leases. So these are now $1,000, $1,000, $1,000. So that's a monthly profit, $2,231 with a down payment of $96,000, 27% ROI. That's a pretty impressive ROI. Now, if I bought this quadplex, and when I did buy this quadplex, my tax guy said, hey, do a cost segregation study. What is a cost segregation study? Basically, the IRS allows you to depreciate a real estate asset, so a quadplex, duplex, single family house, whatever, over 27 and a half years. What cost segregation does is it front end loads that depreciation so you can take a bunch of depreciation in year one. There's certain things in the cost segregation that you can depreciate: the flooring, the windows, carpet, a lot of what is considered chattel in real estate. You can depreciate that all in year one. Let me show you what I did with this particular quadplex. As you can see here, I bought it for $385,000. I did a cost segregation, and it does cost something to do a cost segregation. I use an online thing that I think it costs like $500. I got an additional, out of $385,000 purchase price, I got an additional $75,000 of depreciation year one. What does that look like? So let's assume in this previous example of $100,000, you're in that 24% tax bracket. We already went over it, $24,000 owed in taxes. Now let's use that cost segregation study that I just showed you. That gives us an additional $75,000 of depreciation in year one. What is depreciation? What depreciation is it basically comes off the top of your income. So we take that $100,000 that we are making, we depreciate that $100,000 from our income. So the income after depreciation is $24,313. For those of you math people, you can already see how this is going to benefit you so much. So according to the IRS, that would put us in the 12% tax bracket. So let's go back to the example. Your new tax bracket is $12,000. It looks like to the IRS, you only made $24,000. So that puts you in a tax owed of $2,917. That is a tax savings. And this is based off of just one property, guys, of basically call it $21,000. This is the really cool part. You can take that tax savings and essentially put it into your yearly profit. Now, obviously, tax savings 1 year is going to be less every year. And that's I would call the downside of this cost segregation. You're front end loading your depreciation, so you're not as getting much on the backside. But once we include that tax savings, that ups your yearly profit on year one to $47,000. So divide that by your original down payment. That's almost a 49% return on investment. What else can you get a 49% return on investment in year one? Now, yes, I know the haters that are going to say, but that's just in 1 year. You're not going to get more depreciation on the back end, so that sucks. No, this is how I look at it. I'm going to be buying at least one property per year and continue doing that cost segregation study on each property. That's going to majorly bring down my tax liability. Now, do you guys see how by using this tactic, you could potentially pay $0 in taxes? Let's say you no longer had to pay taxes. And again, guys, this is legal. This cost segregation study was created by the US government for real estate investors like you and me. So don't feel bad about taking this deduction. This deduction is there for you. The government wants you to take it. And if you don't take it, I would make the argument that you're not being a good steward of your money. So this is going to be just a fairly short video, a fairly simple video, but just the one thing of cost segregation. If you use cost segregation studies on your taxes, you could potentially bring your taxes to zero. But again, make sure you get yourself a good accountant who knows how to use these cost segregation studies. And with that being said, guys, I hope you got some value from this video today. Subscribe if you haven't, like this video. Tell me in the comments below what you think. Tell me if you've used cost segregation before. Hopefully you have, but if not, I'm hoping that I saved you some money, especially in this upcoming tax season. And with that being said, guys, thank you so much for watching. Stay vertical.